What's going on, everyone? In today's video, we're going to be going over how to read price action, which can be applied to any market, futures, forex, stocks, you name it. We're looking at the ES S&P 500 Futures 2000 tick chart, and on the right side here, it is about to be the market open. So I'm going to preface this by saying that the three main things you must consider before taking a trade is what's the overall market context? So what direction should you be trading? AKA long, short, where price is likely headed. 2, the type of setup. We're going to be going over exactly the different setups just with examples as I react to the price action on the chart. So stick around for that. And then the last thing is, what is the signal bar? The bar that you enter on, say you go long right at this bar, is it bullish enough to go long or is it bearish enough to go short? That's the last thing to consider. So let's get into the video. The first major price action rule is that in uptrends, or any trend really, we must, after a break of it, have a test at the new extreme before it is considered to be over. So let's take this uptrend, for example. We have a clear break of it with this short-term downtrend, but we did not test the new high. So prices are likely headed back to this high because traders all around the world are seeing this break. We're getting close to the 21 EMA, and we're going to look for a two-legged pullback. So we have new high, we have one leg down, we have another leg down, and really, if you draw a trend channel, it's really a leg down, break, and a new low, meaning the downtrend is over. So let's see if we can get any two-legged pullback, second entry long. So at this point, we actually do have a second entry long if we're counting from this high. So we went down, we had a first entry long, we went down again, and if the next bar breaks above this signal bar, it'll create a second entry long. Now, at this point, it is very risky because it's right at market open. Right when the market opens, there's a lot of potentially good-looking setups, but really it's better to wait on your hands. Also, if you take a look at the bar, it closed right next to the 21-day EMA, so I would avoid the trade just because it doesn't follow the third rule of the signal bar must be good enough in order to enter. So overall market context, we're expecting to reach a new high. The type of setup, we do have a second entry long, but the signal bar is not bullish enough because it closed right near the EMA, meaning it's really like a sideways action. And if we really want to dive deep, we can draw a mini trading range, because at this point of the day, even though prices are looking like they can go higher, we might just be in an overall trading range and prices could even be headed down here. So it's better to wait on our hands even though the upward bias is still intact. So you would have got trapped right there. So now we're looking to fade the breakout. So at this point, a mini trading range is happening. So we have a bullish bar, but it is below the EMA, and prices rocket out of there. So now we do reach the new high, but in reality, we also started a new uptrend. So let's see if we have a break and a new high. We don't yet, so we're still expecting prices to reach this new high. And at this point, we have kind of a triple test. So what's the overall context in this scenario? Right now, you might be thinking that prices are going to be headed up. You might be thinking that prices are going to be headed down. But if we just focus on the most recent price action, we had this steep uptrend, we had a break of it, we had a new high. Then we came back, tested the EMA, and we have a nice lower high with a bearish signal bar, and it's the third touch at these levels. So an aggressive trader might want to actually take this because it's a lower high. That's the type of setup. Overall market context, it's the third touch at these highs. Traders who are beginners might be thinking like, oh, look, there's a wide uptrend in play. Let's go long. So they're going to get trapped, especially an advanced trader might see this signal bar and immediately know if the next one is kind of a trap bar, is the way I look at it, like a very bearish bar after a very bullish one. Prices are at least going to be likely headed to the EMA for a scalp, and that's what happened. But we're still potentially looking to test this high as well. So once we bounce off the EMA again and we have another bounce here, we want to avoid taking any shorts. But at this point, we're still expecting to go all the way down to these lows because the triple test with the bear signal bar does kind of overpower this leg, simply because, let me explain why. So we have this new high. We don't have a test at the new extreme after the break. But once we have several bars in the downward direction and a lower high, and we're reacting to the same price level, the trading range in this scenario will take precedence because that's the most recent price action. And we even formed a leg down. So we're still looking to at least test that low. But once we start reacting to the EMA, having more higher lows, then we have to switch gears in real time and think, okay, even though if it was a trading range, we should go down, because we're bouncing several times, something is telling us that there's more bulls in the market than bears. So until we have real confirmation that we're headed lower, we want to avoid any short setups. So at this point, we have another short-term downtrend. We did test the new extreme. So we had a downtrend, break, several tests at these levels, and we bounced up higher. And in real time, it was clear that we were going to try to test at least some new highs. And if we broke out, then prices were going to rocket out, which ended up happening. Just because when you have this many failed attempts by bears to go below the EMA, and you have this many bounces up, prices are likely headed higher. In this case, we have a failed second entry long, or a failed second entry short. So we have a double bottom, but we can also count from this signal bar. We went up. We had a first entry short right there. We went up again. We came back to test the EMA, and we had a second entry short. So this is a trade that I actually took, and I liked it for several reasons. So like I was saying, we're in this trading range. We failed to reach the bottom side of it, and we had several higher lows confirming that the bulls are still in the market. The EMA is still holding. So it's really a great trade in the overall market context, because we were supposed to be trending down, but when we had several failed attempts, like I said, it's likely that people are going to get trapped if they're going to go short. So the type of setup is a failed second entry short. And lastly, the signal bar isn't the best, but it really is a bullish bar. Even though it's red, it traded all the way down, bounced off the EMA, and nearly closed on its high. So let's see what happened, and prices ended up rocketing out. So now at this point, we're going to be looking for second entry longs once again, because a new uptrend formed. Let's see if we can have some sort of wider uptrend. That doesn't really look valid on the top side, but it looks like one leg up, and then what did I have in real time? In real time, it looked like a spike and sort of a channel, maybe something like this. You really don't know for sure on the wide uptrends, but we at least wanted to test this high once we had a break of it. So we're looking for a two-legged pullback. We have one leg down, first entry long, we went down again, and a second entry long formed, but this would have been the signal bar, so it was no good. But once we have a higher low, because the second entry long formed, we had a higher low above the EMA, we can at least expect to test the highs of the day. That looks like a very high probability setup to me. Stalled for a little bit, but it ended up working for a scalp. So now at this point, we're once again trying to test the new high of the day. We just are in sort of a mini trading range. We're at the bottom side of it, so we're still expecting to go to the top side, and we fail out the top. And we just have some more choppiness. There's really no great entries I see there. So now if we draw our short-term uptrend, we have a break, new high. We have a nice bear signal bar. How many times have we reacted to these price levels? Not very many. We also have this potential leg up to consider, but it really is very steep. So it honestly looks like two legs. like one leg up, break, new high. So it's likely that we're going to be headed down, but we have been in a massive uptrend for the day. I would not recommend going short right there. So now, let's see what ends up happening. We fail out the bottom side. Let's extend this trading range. Prices are reaching the bottom side. We had this strong leg down. We have a break and a new low. And now we're going to look for two failed attempts short because we're going to expect to go to the top side of the trading range. So we have a new low, a first entry short, and a second entry short. So let's see if this can fail and go to the top side of the EMA. So now we have a new low again. So we're going to count from this low. We have new low, first entry short, second entry short. If the next bar breaks above this, all the shorts are going to be trapped because in a downtrend, you want to look for a two-legged pullback to go short. But the overall market context in this scenario, we've been in an uptrend, and on top of that, we're at the bottom side of the trading range, so we want to look for longs because we expect to reach the top side of the trading range. So we shouldn't be thinking short, but what we should be thinking is how can we trap the shorts? So we have new low, first entry short, second entry short, nice bullish bar, but we didn't end up getting an entry because the next bar never broke above it. But once we did eventually reach the top side of the trading range. So now we reach the top side of the trading range. What do we expect? To go to the bottom side. We have a lower high, but it closes right next to these lows. An aggressive trader might take this trade because we're not at the low of the entire range, but it's better to look for two failed attempts long like we did here because this was a failed second entry short. We want to look for a failed second entry long. We don't get it, and prices end up going downhill. So now we have another downtrend. We have some choppiness, mini little range. Very congested. Can we look for a second entry short? We get one, but it looks kind of congested. And if you count from the lows, it's really sort of a third entry. So we have new low here. We have a first entry short, second entry short, and then we go up again and have a third entry short, but it's really a trap trade. So we have this short-term leg down. We have a second entry short, and then all the traders who are going long, thinking that the downtrend is over, went long above this doji bar, and they're going to get trapped by this bearish signal bar because it's a trap of the failed second entry short, if that makes sense. We didn't end up getting a trigger, so we can remove that. And we can honestly extend this trading range. So right now we're really just in the middle of the trading range. Don't want to force anything. So now we break out the bottom side, but once again, we do have something that looks like a short-term downtrend. So we're still expecting a new low of it. And now we have a second entry short. So we have new low, first entry short, second entry short. We're expecting to test this low. And sort of like we saw in the beginning of the day, we expected prices to go higher once the EMA held several times and started getting higher lows, correct? So now what's happening here? We're going down. We're getting rejected by the EMA several times. We test the EMA again, and we have a second entry short. The likelihood is that we're going to keep going down. So I really like this as a short trade because it's a two-legged pullback. Overall context, we're expecting to go down type of setup. Two-legged pullback, signal bar, very, very bearish. And that's why the trade worked out. So now we're still unsure of what's going to happen because we had this downtrend, break, new low, and some choppiness. So let's just draw our short-term trading range to illustrate what's going on with the congestion. All right, so we have a sort of trading range forming. We're reaching the top side, so we're expecting to go to the bottom. We had this short-term leg up, break, new high, lower high, nice bearish signal bar. That looks like a very, very nice trade. And what did we do? We went to the bottom side of the trading range. So now we are expecting to go to the top side, but at an overall picture of the entire day, we're expecting to potentially reach the bottom side because it might just be an entire trading range structure for the day. So prices are honestly looking pretty bearish. But the current price action is telling us we're just in a mini trading range. So if we have 2 failed attempts by the shorts, we can go long if it's above the EMA. We don't get that. We just have some choppiness. And we just move downward. We're just getting lower highs and lower highs. We don't want to look for longs. Can we get a second entry short? We do. Right there, but it looks very congested, so I would avoid taking that short. And really, we just ended the day there. Hope you guys learned some things. Let me know if you guys had any questions. Have a good one, and peace out.